Yo everyone, welcome to this next video. In this video, I'm going to be going over what to look out for when a meme coin is dipping. Now, this is for two reasons. Number one, how to actually identify whether or not you should buy a dip on a meme coin, whether it's going to do a reversal. And number two is whether you should get out of a meme coin. Let's say you're in a coin and it's dipping and you don't know whether it's dying out or whether it's going to reverse and carry on pumping. All right. So I'm going to go over three things in this video, and trust me, these three things, once you master them, you'll be able to hit 2x's, 3x's, 5x's, 10x's just off dips alone. Because dips themselves are what make people a lot of money, because a lot of people tend to sell when a coin starts to dip and they don't actually understand what's going to make a coin reverse. So let's get straight into it. As you can see, I've got two coins in front of me as an example. Now, first things first, when it comes to a coin dipping, other than external factors that might influence sort of a pump, you mainly want to look at volume first thing, all right? Because volume is what dictates whether a coin is going to have the potential of pumping again. As I said, unless a tweet comes out, unless some sort of news comes out or something like that, for example, if Donald Trump gets elected, obviously the Donald Trump coins are going to pump, right? That has nothing to do with the volume within the coin, the current volume. It has to do with the actual news event that happened. But if it's solely to do with the coin, and let's say it's a random meme coin, then I'm going to show you exactly why volume plays a part. So first of all, what is volume? Volume, I personally identify as three things in one. Here it identifies as the actual value coming into the coin, or you could call it liquidity, whatever you want to call it. Me personally, I combine all these three as volume, because as much as we can say 37K is the volume, why does that matter if, let's say, the 37K was only put in by two holders, right? That doesn't really give you any hope, because if those two holders were to sell, the coin would just dump, right? But you need to take all three of these into consideration. How much transactions are there? How much volume is there? And how many makers there are as well. By makers, it basically means wallets, right? How many people have basically contributed to this 33K in volume? Now, as you can see, there's buy volume and there's sell volume. That is combined when we're looking at these stats, right? So don't just think, oh, there's 33K volume. That's just how many people have bought in and how much has been bought in. No, that's a combination of buys and sells, right? Hence why you can see this coin dipping right now, because there's been 16K buy volume, but 18K sell volume, okay? Now, another thing you want to look into is the bars at the bottom. These indicate volume as well. The higher the bars, the more volume there is, right? As you can see. So as you can see in the very, very beginning, the bar was the highest. Why? Because that's when the most amount of volume came in. Now, you can also see on the top left corner the amount of volume that came in. So in the first minute, it was 60.3K. Now, why is this important? This is important because it gives you a clear indicator as to whether or not the coin has enough volume for it to reverse, or is it going to die out, and so on and so forth. So as you can see, the coin slowly starts to drop in volume. And what happens when the coin starts to drop in volume? The coin started to drop as well, right? Pretty self-explanatory. The less volume there is, the less likely the coin is to pump. But don't just think, oh, just because it's going down, the coin doesn't have any potential to pump. No, that's not true. Because as I said, volume is a combination of buys and sells, right? So if there's only a small bar, but it's only been buys, then clearly it's going to pump, as we saw with this candle, right? Same with here. As you can see, the bars here were as small as can be, but the coins still continue to go up, which gives you, again, a clear indicator as to whether a coin is going to pump. Because even if these coins were, even though these volume bars were very small, they're all green, meaning it was mainly buys that came in and it's continued to pump. I'm glad this coin is dipping, because I'm going to show you this as an example as to why it's dipping, why it didn't reverse, or if it did reverse, and what we should look out for when looking at a chart. Let's say we bought here, but I'll get onto that later on in this video. So as you can see here, the volume just fluctuates. It more or less just stays about the same, some red, some green, so on and so forth. But it gives you a clear indicator as to what you should expect. If you start seeing a lot more red bars, then clearly it's going to dip, because it means sells are overpowering the buys, okay? And vice versa. If you see a lot more green bars, that means the buys are overpowering the sells, right? So that's volume. You need to make sure that there's volume in the coin for there to be a reversal. Now, that is dependent on the coin itself. If the market cap is within the millions, and let's say the market cap was in like 20 million, and you see the volume is like 50K with like 100 makers, that isn't necessarily a good thing, even though 50K you might consider a lot of volume. It's not, because 50K won't move a 10 mil market cap coin, 20 mil market cap coin the same it would move a 400K market cap coin, right? It needs to be relative to the market cap of the coin. So if I was to see a 50K market cap coin and the volume was 50K, I would have some hope in that coin for it to reverse, because that is a lot of volume relative to the market cap of that coin. All right. Now, again, same the other way around. If you see a 300K market cap coin and the volume in the past 5 minutes was 300K and like 1,000 makers and is dipping like this, I would buy the dip. Now, where I would buy the dip, again, I'm going to get onto that later on in this video, but I would definitely buy that dip, because you need to think about it psychologically. If 1,000 people have just been involved in this coin in the past 5 minutes, what is the likelihood of those 1,000 people just closing the tab and moving on? Very unlikely, unless the coin rugged, unless the coin dev announced on Twitter that they're, I don't know, leaving or whatever, and it's not going to have a community takeover, something like that. Yes, that's when I would think to myself, cool, this is probably time for me to get out. But if no such thing has happened and people are just panic selling because they're seeing everyone else selling, there will be a reversal if there's enough volume. All right. Again, sorry to just repeat myself, but you also need to look at both sides of the chart, because as you can see here, there's a lot more sell volume than there is buy volume. All right. So if there's a lot more sell volume overpowering the buy volume, then understand that even if there's a lot of makers, a lot of them just sold, but they're also potentially going to look to buy the dip. All right. So that's number one. Number two is you want to look for a actual reversal in the chart itself. Now, what do I mean by that? When a coin is on an uptrend, it almost creates a staircase-like pattern, right? You see how a stair goes. So you see how a stair goes like that. That's exactly what a coin chart will do if it's an uptrend. Now, we call these points higher highs, higher lows, higher highs, higher lows. Well, it won't realistically be like that. It would more so be like this. But as you can see, it's like a staircase, right? So this is a higher high. This is a higher low. This is a higher high. This is a higher low, right? See what I mean? Now, if this was to go like this, what have we done now? It's just reversed. What it's just done is done a lower low, lower high, and it's about to do another lower low and a lower high, right? Hopefully that makes sense. Now, why do I need to show you this? Because in order for you to understand whether a coin is going to do a reversal, you need to understand how the chart is meant to look. So let's say a coin is dipping now and it's doing, lower low, lower high, lower low, lower high, as you can see here. So lower low, lower high, lower low, lower high, lower low. Now, let's say this was to go here. It just made a higher low, right? And then what you want to do as someone trying to catch the dip, you're trying to buy the reversal. You're not going to buy here. I haven't got a mouse, by the way, so that's why my drawing is horrible. But you're not going to buy here. You're going to buy here. Why? Because let's say for whatever reason, it doesn't actually reverse and it actually just does another one of these and then it continues dropping. At least you can sell here. And that's the only loss you took. And it's not that big of a loss, right? But if you bought here, then obviously it's going to be a lot more of a loss. So you want to buy here. And the reason why I say that as well is because the likelihood of it reversing is a lot higher if it was to do this movement. Whereas if you were to buy here or here, you don't know if it's going to reverse. You're just gambling at that point. But usually what tends to happen, it will literally do that. So I'm going to show you an example. All right. As you can see here, obviously it'd be better if I go into the 1 second time frame, but I just want to make this as quick as possible. As you can see, it did a high, 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 low, high, 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 low, high, high. But then it broke structure, right? It no longer did the high, low, high, high. It broke the staircase, right? Now it's starting to go down. Now, as I said, you can see this clearer on the 1 second time frame. But let's say it just started to go down, go down, go down, go down. But then it broke structure, right? It made a higher low, and then it made a higher high, and then a higher low, higher high, higher low, higher high. What did it do then? It broke structure, right? You see what I mean? Like, as soon as it breaks structure, you know it's probably going to continue dipping now, or vice versa, the other way around. Literally, as I said, as soon as it broke structure, it's now starting to dip. So what would you look out for in this dip? You'd look for what we just saw here. We want it to break structure. Right now, it's doing the downward staircase. It's going lower low, lower high, lower low, lower high, lower low. If it doesn't close above here, then it's going to just, again, do a lower low, lower high, lower low, lower high. And that means it just continue dipping. However, if this now goes here, we can expect it to potentially come down to about here, and we can buy there, and then it could go back up. If it doesn't go back up, we just cut our losses here, and it's going to be a small loss. See what I mean? That's exactly how you buy the dip, right? Now, I haven't gone over all points yet. So, don't click off this video thinking, oh yeah, I know how to buy the dip. No, you're missing one crucial aspect of it. And I think this is probably one of the most important things you need to know. All right. So if I just take off all these blue marks, one thing I want you to pay attention to, in fact, two things, right? Another common thing that tends to happen when a coin is dipping is the coin will dip to a previous dip, right? And a lot of people don't actually notice this. So as you can see here, the coin pumped, it was doing, it was going on an upwards trend, and then it dipped and so on and so forth. It went up here, dipped, went up here, dipped. But what do you see? You need to look at two things. Hold on 1 second. As you can see here, it pumped and it dipped to here, and then it pumped a little bit and it dipped to the same place that it dipped to earlier, approximately, and then it pumped again, right? Then it dipped, pumped, and then it dipped to where? It dipped literally to, once again, the same point as earlier, right? A lot of the time when coins dip, if you want to spot a reversal, you want to look at the previous dip, because a lot of the time it will dip to the same point. So this, for example, it could potentially dip to where this dipped to earlier right now, and then retrace again. All right, let's see. We'll see. Now, again, it's not going to touch it to a T. It's not actually going to, fully touch the line and go off. It might just go a little bit over the line. It might retrace from here, but it could do a little retracement. Now, you might see this and think, oh, it's going to go to here and then it dipped. Oh, it didn't really reverse. Yes, it did. You could have easily done a 2x by it dropping to 150 and going to 300K, getting out here, and then let it do its thing. You can leave a little moon bag in case it continues to pump. If it doesn't pump, then at least you made a quick 2x. But let's just see if it actually reverses. Now, while it does that, I want to make something else clear to you. Well, in fact, before I go on to the next point, I'll show you this as an example as well. As you can see here, it did the exact same thing. So it's pumping. I wouldn't really count that as one, but it pumped. And then look, where it was earlier, it almost dipped to similar point, right? Almost. And then it rallied again. And then what did it do? It dipped to a similar point that it dipped to earlier, right? As you can see, just like that. Now, I don't know where this is going to dip to. It could have basically dipped to where it dipped to earlier. I don't know. It could even dip back down to here. We'll see. I don't know. But there you go. As you can see, look, it's starting to reverse because of the previous dip. Like, the previous dipping points are common indicators as to where it's going to dip to next. It's not always the case. This is why I tell people DCAN, because let's say, for example, you expected it to retrace around here. It did do a little retracement, but at least you didn't put a full bag in case it didn't. But as you can see, if you bought here literally 150, you'd already be 50% up, right? It could even go up to 300 and you'll do an easy 2x, right? In some cases, it might continue pumping and you do another 3, 4, 5x, all right? Which leads me on to the last point, and I promise this is the last one. What you need to understand is almost everything, apart from the exception of tweets, news events, so on and so forth, everything is psychological. Everyone is using their brain to justify things. So what do I mean by that? I mean that when people tend to want to buy dips, when people tend to want to sell, or whatever it may be to do with the meme coin charts, they're using psychological levels within their mind. I'm going to explain what I mean by that. Let me use you as an example. When it comes to you buying a coin, let's say you bought a coin at, I don't know, 200K, you most likely will say to yourself, you know what, I'm going to wait for this to go to 400K and I'm going to sell. You wouldn't ever say, I'm going to wait for this to get to 368K for me to sell. Why? Because 368K is just not a round number. It just doesn't make sense for your brain to think of 368K. You're going to think of round numbers, and you're going to think of numbers that equate to like double what you put in, right? So let's say you bought at 200K, you're going to want to go to 400K. Let's say you bought at around 238K, you're going to round that up to like 250K, and you're going to say, okay, I'm going to sell around 500K. That's how our psychological brains work. Like that's how we work when it comes to trading meme coins, right? Now, why is that important to you? You need to understand this when trading both ways. If you're buying a coin and you're planning to sell it somewhere, understand that everyone else has the same plan of selling too. So when you buy a coin here and everyone's planning to sell at 500K, as you can see here, remember, you're not the only one who's going to sell at 500K. You want to sell a little bit earlier. You want to sell at 474K. You want to sell at, I don't know, 460K, something like that. Because understand that once it hits that psychological point, everyone's going to sell. Right? Now, in case you're wondering, what are the psychological points? There's so many. There's 100K, there's 200K, there's 400K, there's 500K, there's 750K, there's 800K, there's a million, and then 1.5 mil, so on and so forth. Right? You need to understand this. Now, why is this important for this particular video? Because it works the other way around as well. When people are buying dips, they're thinking of psychological points. Other than this, they're also thinking about psychological points. They're thinking, where should I buy the dip? Oh, I'm going to buy the dip at 200K. Or I'm going to buy the dip at 500K. I'm going to buy the dip at a million, right? That's what people think. No one ever says, I'm going to buy the dip at 368K. It just doesn't make sense. Now, as I said, it's not always going to touch 400K and just bounce off directly. It'll go a little bit under or it'll stay a little bit over. And then it will start to reverse, right? And we can see it as examples. So if we go here, for example, and we look at what a coin has done, it's done. It went up to 200K approximately, and then it started to dip, and then it went up. Where did it touch? 300K. As you can see, the wick touched 300K, and then it dipped. And then where did it bounce off of? Half of 300K, 150K, and then it bounced up again. Where did it bounce off of? I wouldn't really call this a psychological point. Maybe people were aiming for like, I don't know, 350K. Well, to be fair, we can count this as 300K because it's gone up to 315. As I said, it can always go over. What did it do again? Dip to half of that. And then again, it pumped again. It hit, it's almost like a support and resistance level. This was resistance, this was support. Now, once it broke that all-time high, it then continued to pump. Next psychological level, which is what? 500K basically. Right? And then it dipped again. Where did it bounce off? Wouldn't necessarily say this correlates to any sort of psychological level. Again, it's not always going to be to a T. But just understand these psychological levels do play a part. They do play a part. All right? Again, like, let's see if we can find an example on here. If we look at here, for example, and we zoom into earlier in the chart, I haven't checked these beforehand, by the way, so I'm literally just hoping that it proves me right because I know that I use this strategy all the time. But as you can see, it pumped to about 300K. It dipped to where? About halfway. There you go. Literally the same thing as the last coin. As you can see, this wick touched about 150K, right? And then it bounced back up. And then let's see, you could say it touched, well, no, I wouldn't really consider that a dip. But then what did it do? It went up to almost a mil. Now remember, a mil is a very big psychological point. Usually when a coin is about to touch a mil, there'll be huge sell-offs. Huge sell-offs. And I tell everyone in my group as well, I'm like, sell before it hits a mil. Sell between like 800 to 900K because once it hits a mil, everyone's going to sell. People will have take profits in place, right? Like people will be selling automatically when it hits a mil. So you don't want to sell at exactly a mil. As you can see here, it barely touched the mil and people started selling already. And then what does it do? It dips. Wouldn't really necessarily call this psychological point, but maybe it dipped to here because of the previous dip, as we spoke about earlier, right? Then it sort of consolidated, went back up. Where did it go to next? A mil. Again, it dipped. Pumped again. Where did it go to? Let's see the next one. You could say 2.5 mil. Again, another psychological point. Where did it dip to? Let's see where it dipped to. It dipped to almost a mil. It didn't really dip to a mil, but you get what I mean. Like, the point is there. We can even see them on bigger points. So for example, if we go into actual market cap, right? We can see it's bounced off the psychological point of 3 mil, right? It bounced off the psychological point of 5 mil, right? Look how it's barely struggling. It was struggling to pass 5 mil, because whenever it touches 5 mil, people would sell, because that's where people would think, I'm going to sell at 5 mil. I'm going to sell at 5 mil. Same thing here. People sold at 5 mil. That's what I'm saying. Like, it's all psychology. Again, it bounced off 2.5 mil. It's struggling to bounce off 2.5 mil, but that's why people want it to bounce off of. That's why people are thinking, oh, let me buy the dip at 2.5 mil because it's half of the all-time high, which is 5 mil. Right? Take this stuff into consideration. And if you have any questions regarding these strategies that I spoke about in this video, let me know in the comment section below. And if you like meme coin content, subscribe, and I will see you in the next video. Take care.